Hello and welcome to BQ Prime. A very good morning to all the viewers. Joining us on the show today is Chandan Taparia to talk about what the NSE cuts in terms of Bank Nifty F&O market lot size would actually mean for the markets and what's in store this week. Welcome to the show, Chandan, and a very good morning.
Thank you so much, Hiral. Thanks for having me.
Always a pleasure. Chandan, as we know, NSE has cut the F&O market lot size for Bank Nifty to 15 from 25, and this will be from beginning of July 2023 contracts. What would this actually mean for the markets?
So I don't think it's gonna impact anything. The good part is that those who are looking to trade in the lower quantity, those who want to test it with the less risk, they can get benefit out of that. But it will hardly affect anything to the people who are trading in quantity. Good part is that ultimately the aim of exchange is to keep the lot size of F&O to 5 lakhs as per their rule book, and they keep on revising whenever it required. So I think because of that they have done. Only the concern we are having is now that earlier Nifty and Bank Nifty like having some sort of parity, but now it's near to 15. So 50 lot size of Nifty, that means your value is 17,500 into 50 goes to near to 8,50,000. And Bank Nifty will be, if lot size goes to 15, then the value will be near to 6 lakh. So that some difference is there between the value of the Nifty and Bank Nifty. Otherwise, there is no major impact. Those who are trading in Nifty and Bank Nifty pair trade or some sort of arbitrage opportunity or some sort of hedging from one to other, they might get some sort of concern. But again, lot size can be adjusted with the quantity of 15 if they are doing with multiple of 3, 4, 5 or whatever. So I don't think that this is going to change anything. But yes, to add, like in the last week, regulatory came out with the STT change. So that might affect little bit to the people who are in high frequency trade and all.
Right. So, Chandan, earlier when NSE had done it, we saw volumes did jump in terms of retail participation, right? Because it'll be less money needed and hence more participation in terms of margins. So, is that an expectation that similarly we will see volumes go up?
Yeah, I totally agree with that. However, the good part is Bank Nifty is universe highest traded index. We love the volatility and we get the volatility. So it's a good product for buyer and seller and option strategy all. Because of the load size. See, ultimately the aim of exchange is to reduce load sizes, allow more people to participate on it. Even if someone is to take a trade in one lot and quantity is 25, the risk is slightly higher if compared to 15. But those who are trading in multiple quantity, for them it hardly matters. But yes, because of this slight change might be there from the retail participations.
Right. Moving on overall from a market perspective now, Friday's session has been really strong. One thing that we've noticed is that the PCR has shot up, significantly in terms of Nifty and Bank Nifty, which is a positive. Benchmark indices are coming in pretty strong as well. Say, for example, if you talk about bellwether like a Reliance Industries, what's the setup now looking like according to you?
Yeah, so like if I look at the market internal, market has done all the positive thing in last two trading session, especially on the last day of the March expiry. Recently took support near to 16,800, 828 precisely, and managed to surpass the immediate hurdle. So 17,200 used to be the earlier trading band. Market used to find support near to 16,800, 28, 850, and used to get stuck near to 17,200. So that level has surpassed on the last trading session, and after the technical setups are turning on the positive side. Now, if I look at the mechanical indicator, all mechanical indicators are turning up because on the weekly scale, we are negating lower top, lower bottom. Now, if I talk about the derivatives data setup, PCR has jumped to 1.27. Your India VIX is corrected by 5%, now below 13 level. However, FI's long short ratio has not much increase, but rollover from Bank Nifty on positive side is giving some trigger for short coverage. So I think all these data setup are indicating some comfortable move or some more bounce in both the indices. I believe decline in the VIX will now support to buy on declining stance of the market, and higher put call ratio is going to make the higher base for the indices.
Right. According to you, what should be the strategy that one should be adopting at current levels?
So earlier we were trading the range between 16,800 to 17,200 zone in last 10, 12 trading session. Recently the breakout has happened. We surpassed the barrier of 17,200. So your trading range is shifting higher. Earlier we were trading between 16,800 to 17,200. Now range will be 17,000 to 17,700, 800 zone. So we have to play with higher trading band given the data setup and the technical parameters. As of now, till it holds above 17,250, we'll play for further bounce to us 17,442, 17,550, and ultimately to 17,777.
Right. So, with this kind of pullback that we are expected to see, should the strategy be number one, buy on dips? And two, should investors actually use this opportunity to buy, probably bigger names, and stable names?
Yeah, I think whatever your question is totally right. And trader or investors should totally focus on the same. Those who are looking for index trading, they should now go with buy on decline compared to earlier sell on bounce, looking at the market structure. Those who are looking for investment, now they can start accumulating the good name, which are already down from higher levels, forming the base. And you have seen that in one day recovery, many heavyweights, good quality name has seen the good turn. So definitely this is the time to accumulate. But yes, it may time to start the next leg of rally. Some sort of positive to range bound bias or positive to range bound move could be there in the Indian market.
Right. So, Chandan, very lastly, what would your top picks be, from the derivative and technical chart perspective? Where are you seeing strength?
Yeah, so positive on selective banks. Bank Nifty also given a good breakout on the lower time frame. So ICICI Bank is the stock which has given a breakout of multiple days. So here we can focus for a move towards 900, 920. In last couple of days, we have seen some action in pharma names. So Dr. Reddy will be the counter, which is showing strength, already rallied by 4% in the last week, making higher tops, higher bottom. So here also one can focus with support of 4570 towards 4700, 4750. So banking, selective pharma, and then counter from your few financial name would be focus in this market.
Right. My last question coming to you is IT continues to remain in focus ahead of the numbers. Banking space as well is going to be absolutely crucial to support that, pullback in terms of Nifty as well, right? So both sectors, what would your view be?
Yeah, so like Bank Nifty positive view, given the breakout above 40,200 zone. So I believe hold of 40,200 can take it to 41,000, 41,250. Nifty ID witnessed some recovery, but again, volatile swings could be there. So recovery may be there, but I'll be very selective on the IT name. So Tech Mahindra is one name in the IT where we can focus with support near 2,075. One can target to us 1140. So IT is going to be very selective, but private bank or banking index could see some more uptick from currently.
Right. So, I mean, that's going to be an interesting setup to watch out for as well. Thank you, Chandan, so much for joining us on the show, and have a great week ahead.